Welcome back to another video lecture of financial market and instruments. So till date we have discussed many things about the financial market. We have discussed that what is the financial system, what are financial institutions, what are financial intermediaries. Many things we have discussed about the financial system and the financial markets. In our last couple of classes, we had discussed on the commercial banks and we had gone through various facts about the commercial bank. We know that what are these financial institutions, what are its significance, its importance, its functions, and how these commercial banks are very essential and vital for the economy of a country. So in today's class, we are going to discuss another financial institution which is as inevitable as the other financial institutions of the country. So today we are going to discuss on the development banks. So let's dive into the course content of today's class and understand that what this development bank is. So let's start. So as we know that banks are the financial institutions which support the economic system by acting as a mediator between depositors and loan seekers. So banking services are essential for the development of a country, functioning as the backbone of economies. On the basis of the purpose they serve in an economic system, there are three categories of banks, mainly commercial bank, cooperative banks and developmental banks. So as we have already discussed that financial institutions are a very important component of the financial system, and in financial system the banks are the major intermediaries, or banks are the institutes which are intermediating between the fund seekers and the fund providers, as we have said. And on the basis of the services that the banks are providing, we have categorized the banks into three broad categories. Those are the commercial banks, the cooperative banks and development banks. So on the commercial banks, we have very widely discussed about commercial banks and its functions and every tit and bit of the commercial banks. And if you have not gone through the concept and the functions of the commercial bank, please do visit, the link is there and you can go and visit those classes of the commercial banks. So today we are going to discuss more on another important bank, that is the development bank. So the main difference that we can find between a commercial bank and a development bank is that a commercial bank functions to provide financial services to industries and individuals, whereas a development bank is set up to provide funds for infrastructural and economic development. And commercial banks are set up under the Companies Act, whereas development banks were set up under a special act. If we will look into that what is the difference between this commercial bank and development bank, we will find out that these commercial banks are established or set up under the Companies Act, and the development bank are set up under a special act. And the main difference between the commercial bank and development bank, if we will look into, that is very significant, or we can say that we can find out the difference in a very so the difference between the commercial bank and the development bank. So as the name suggests, the development bank are special financial institutions, or they are the specialized banks, those who are designed for the developmental activities or for the developmental, or we can say the programs or the developmental projects that will boost the economy of the country and brings development to the country. And these developmental banks have more significance in the developing countries like India. So the development bank is a financial institution dedicated to fund new and upcoming businesses and economic development projects by equity capital or loan capital. So these are specialized financial institutions, as we have said, and engaged in the promotion and development of industry, agriculture and other key sectors. So its main emphasis is the welfare of the people. So for example, we can say that Asian Development Bank's overreaching goal is to decrease poverty in Asia and the Pacific. So these development banks are specially designed or specially established with some specific and special aims or special objectives, we can say, and those are moreover the developmental aspects or developmental objectives that we are saying. So for example, we can say that the Asian Development Bank that is being established specially, and the focus of this Asian Development Bank is the eradication of poverty. So with this type of specialized objective of development, the development banks are set up, and moreover their aim is the welfare of the people or the welfare of the country or welfare of the citizens of the country, we can say. And these developmental activities could be on agricultural development, industrial development or infrastructural development, like that. Some major developmental sectors or aspects they are taking up and taking care of the development of that particular sector. So the development banks essentially are multi-purpose financial institutions with a broad development outlook, we can say. So it can be defined as a financial institution concerned with providing all types of financial assistance to business units in the form of loans, underwriting, investment and guarantee operations, and promotional activities, economic development in general and industrial development in particular. So let's go and understand that what are the objectives of these development banks. So the main objectives of these development banks are to promote industrial growth, to develop backward areas, to create more employment opportunities, to generate more exports and encourage import substitution, to encourage modernization and improvement in technology, to promote more self-employment projects, to revive sick units, to improve the management of large industries by providing training, to remove regional disparities or regional imbalance, to promote science and technology in new areas by providing risk capitals, and also to improve capital market in the country. So these are the various broad objectives with which the development bank is working. So in a nutshell, if we will conclude, or if we want to say that what is the main objective of this development bank, we can say that the development bank are working for a balanced economy or for a wholesome economy in which every sector is developed and every sector is being prioritized. So it could be the objective of the development bank, we can say. So this development bank, as we know that these are the financial institutions. These are the financial institutions, or these are the banks which are having many DFIs, or we can say that development financial institutions which are working for the development of the country and the economy. And these financial institutions are moreover giving the long term credits for a lower rate of interest. So as we know that every developmental activities, let it be agriculture, let it be infrastructure, let it be institutions, so every developmental activity needs a longer term, or it needs a time span to be wholly and surely established. So for the developmental activities, when the institution is established, they are giving credit, we can say, for a longer period of time and at a lower rate of interest. Another important aspect that is there with the development bank is that there is a social benefit aspect that is attached to to the development banks or the DFIs, or what we are saying, that development financial institutions. So they have a social benefit aspect for, say, we can say the construction of roads, the construction of bridges, the agricultural sector. So like that, various things are there, or the projects are there, those who are taken up or those who are taken care by the development bank are having a social benefit aspect attached to it. So now let's understand that how these development banks work. So to lend for long term, development banks require corresponding long term sources of finance, and this is usually obtained by issuing long dated securities in capital market. So these are subscribed by long term savings institutions such as pension and life insurance funds and post office deposits. So the long term investments associated here have notable social benefits as well as involve considerable uncertainties. So giving this, development banks are often supported by governments or international institutions also, and such support can be in the form of tax incentives and administrative mandates for private sector banks and financial institutions. So this is to help them invest in securities issued by the development banks. So this is how the development bank works. So now let's understand and just have a look that how these development banks evolve in India, or we can say that the evolution of development banks in India. So IFCI, the Industrial Finance Corporation of India, that is the first institution or the first DFI or development financial institution, which we can say, which was set up in the year 1949 after 2-3 years of independence, we can say. And this was probably India's first development bank for financing industrial investments. So in 1955, the World Bank promoted the Industrial Credit and Investment Corporation of India, that is ICICI. The ICICI is the parent of the largest private commercial bank in India today, that we are seeing, that ICICI Bank. That ICICI Bank, which is the largest private commercial bank of India today, is promoted by the World Bank in the year 1955, and the Industrial Credit and Investment Corporation of India was set up. Then after that, it was a collaborative effort between the government with majority equity holding and India's lending industrialists with nominal equity ownership. The objective was to finance modern and relatively large private corporate enterprises. So we can say that the objective was to finance the modern and relatively larger private corporate enterprises. That is the objective, or we can say the main goal is to promote or to encourage those private corporate enterprises, or those private corporations, for the development of the economy of the country. In the year 1964, the IDBI, that is the Industrial Development Bank of India, was set up as an apex body of all development financial institutions. So as the establishment, or we can say the formation of DFIs, has been traced back long to 1949 by the establishment of IFCI, but the major or the apex financial body or the developmental bank or DFI is been put forward by the establishment of IDBI, that is the Industrial Development Bank of India, which is a milestone in the development banking sector. So as we can also say here that at the time of independence, there is a very low scope of development of the economy. So as the country is newly independent, or we can say that it has a very new economy, and there is no much scope in the financial market, or there is no much scope in the economy for the developmental sectors. The savings rate is very low, there are low credit capital availability for the development. So there are many constraints, those are there. By the establishment of these DFIs, the development sectors have been taken care of, or they are been promoted, we can say. Now, what are the source of fund of these developmental banks? Let's discuss. So, as the domestic saving rate was low and capital market was absent, development financial institutions were financed by the lines of credit from the RBI, that is, some of its profits were channeled as long term credit, and statutory liquidity ratio bonds, into which commercial banks had to invest a promotion of their deposits. So, as we have said that at the time of independence, or at the initial point of time, the domestic saving rate was very low, or we can say that saving rate was very low, and the capital market was not present. The capital market was absent at that point of time. So, the source of fund, or we can say the source of finance for these DFIs are moreover from the RBI. The RBI is promoting these developmental banks, and also the statutory liquidity ratio, or the statutory liquidity that are there with the banks, they are also the source of fund for these development banks. So, in these DFIs, or the development financial institutions, they have a very important or very significant role in the country's development, and especially, as we have said, for the developing country like India. So, these developing countries are based, or this development of these developing countries are moreover dependent, or moreover are banked on these development financial institutions. So, these development financial institutions have a very important and significant role in the country's development, and the role of these development financial institutions are so important and vital that we have segregated these development financial institutions into various sectors, or we can say the various types, or we have classified these development financial institutions according to the sector specific. We can say that either for the development of the industry, or for the development of the agriculture, or for the development of any institutions, development of the small scale industries, uplifting of the Sikh industries, or the revival of the Sikh industries. So, like that we have categorized the development financial institutions. There are national development banks, there are specific development banks for specific region, or we can say the region specified development banks are also there. So, we can say that this development financial institutions is a vast area, and we will be learning that in our upcoming classes in detail, that what are these development financial institutions, how they are segregated or classified, what is the significance of each financial institutions, or these financial or development institutions are having on the development of the country, and how they are working, and what is their contribution for the development of the country. And these development financial institutions are very essential, and we can say that they are contributing in the development of the nation post and pre liberalizations. There are also many constraints post liberalization on the developments. There are many we can say that upliftment, or we can say that there are many encouragement of these development financial institutions after the liberalization in the year 1990. You must have known that in the year 1990 the India has entered into the global market, or we can say that we have an open market system, and we open our economy to the world economy. So, this liberalization of Indian economy also have impact on these development financial institutions. So, all these various things we are going to discuss in our upcoming class. So, keep watching our upcoming classes. It will be going to be very interesting, and if you want to know anything, or if you have any query, you can give it down in the comment box. Thank you.